money printing penalizes those who save, and it rewards those who consume. And so people who had diligently saved all their lives lost everything. The hyperinflation basically wiped out the savings of an entire generation.
Welcome to the Silver Doctors exclusive interview with a first-time guest, Mr. Philip Haslam. He's a researcher, author, and head of communications for Zimbabwe Cash, joining us from Johannesburg, South Africa. Today, he's joining us to share his thoughts and experiences based upon the hyperinflationary crisis that's taken place in Zimbabwe and some of the recent developments there. Philip, welcome to Silver Doctors.
Hello, Mike, and greetings to your Silver Doctor viewers.
Well, Philip, I appreciate you taking time out of your day to sit down with us here, Silver Doctors. I thought it was very important for the viewers here to really get a thorough, in-depth look at the consequences of monetary policy going rogue, in a sense, when it leads to hyperinflation. And just most recently, I'm hearing more and more news about possible hyperinflation occurring again in Zimbabwe. So I wanted to reach out to you to have you share your thoughts based upon the fact you're right in that area, as well as your research. So before we get into that, give the viewers a little bit of your background, how you arrived at and what really triggered you to want to research and bring the information of Zimbabwe to the public.
Thank you, Mike. My background, I got exposed to what I now know is the Austrian School of Economics at university. And we were studying at the time at university the approaches of John Maynard Keynes, Keynesian thinking. And I was very sort of concerned about some of the things they were saying. My interest only grew, and I developed a course on money and banking, and specifically why there are some major concerns with global money printing. At that course, my current co-author said to me, Philip, we have an example of what happens when a country prints money on a large scale right next door to us in South Africa. And that's in Zimbabwe. And he said, I'm telling you, there's stories there that people have not told that are fundamental for us understanding the hyperinflation process. So I went to Zimbabwe. I studied the first hyperinflation, and I wrote a book on it. It's called When Money Destroys Nations. And it's briefly about how hyperinflation ruined Zimbabwe, how ordinary people survived, and the book provides warnings for nations that print money. That was the first hyperinflation. It ended in 2008, and very fascinating story.
I do agree. Now, Zimbabwe, from this side of the planet, we don't really hear much about what happens in detail in countries in Africa. And so Zimbabwe is a very unique story, given the fact that they have a rich history of being a naturally rich and prosperous land up into a certain, a president, Mugabe, came into office and began changing things. So give us a little bit of a short glimpse as to the transition from being a naturally rich country up until the point where people were panning for gold in the streets and things of that nature in the country of Zimbabwe.
Yes, so it was a slow process. In 1980, the country left colonialism, and they had free and fair elections for the first time for all people in the nation. And the country was in a real boom space, and global money lenders really embraced the country and lent a lot of money to Zimbabwe. And for about 20 or 17 years, actually, it was 1997, November 1997. During that period, the borrowing and debt facilities had grown, and the country basically had become more and more indebted. November 1997, there was a moment called Black Friday. And that was effectively, the summary is that there was a disagreement with the IMF, the World Bank, and with Zimbabwe, and the World Bank withdrew their lending facilities. The country had gotten quite profligate and had made some major spending promises to the people of the nation. And the World Bank was very concerned about the ability of Zimbabwe to repay its debts. And so this credit crunch, this credit moment, caused a mass capital flight on the currency. And in response, the government responded to that by printing money and consuming on an ongoing basis with newly printed money. That then led to a spiral that took just over 10 years. It was 11-ish years that eventually led the country into increasing levels of inflation. The more the government printed money, the more it led to inflation, which resulted in the greater need for the government to print money to continue the same level of consumption that it had, and it led into this spiral. There was some major banking crises in these times. And the government responded to these banking crises with newly printed money, bailing the banks out with newly printed money, and ultimately it led to extreme amount of pain and suffering for ordinary people living on the street. Like a lot of these things can be high economic terms that people can get lost in discussions around, with academics. The powerful thing about the Zimbabwe story is that money printing impacted ordinary people living on the ground in unique and extremely painful ways. And I mean, if I just had to summarize kind of in a nutshell, stores emptied, government services were interrupted, and so people couldn't get water and electricity. You couldn't get any fuel. Your normal channels for accessing real goods and services were disrupted because the formal sector was effectively controlled by the money and the banking system. And if you wanted to pay, you had to pay through the banking system, and it led to extreme amount of like chaos and disruption to the very fabric of the Zimbabwe society. Approximately 1/3, a quarter to a third of Zimbabweans left the country during that time, and it put sort of some unique pressures on the people, which are unique in a sense that we don't actually experience that on a day-to-day basis, but it's very typical of hyperinflation as it happens in every country, as it's happened in many times in the last 100 years. For instance, the Venezuelan economy is going through hyperinflation at the moment, and they're experiencing identically, it's an identical social scenario to the one that was in Zimbabwe.
Yeah, it's very interesting to me how it looks like at the peak of the hyperinflation in Zimbabwe, I read somewhere saying that it was about 500 billion%. So just those numbers, 500 billion% at the peak of inflation is a number that I can't really fathom that. So I couldn't imagine living through it. But to see that it happens over and over and over again, and the population itself, the people don't seem to recognize the steps that lead up to it. Can you walk us through, based upon your experience there in Zimbabwe, the incremental steps? Because it starts with making a lot of promises, and then the government, I guess, trying to print their way out of it. Are there any similarities or steps that we can take away from Zimbabwe, Venezuela, that might come to mind?
There are absolutely steps, and it looks very similar in every occasion. I mean, there are unique circumstances with every country that goes into hyperinflation, but the steps are very similar. Effectively, I mean, in a nutshell, what happens, a country consumes in debt, and everyone's happy while the government's consuming in debt, because the government's actually spending and so-called stimulating the economy, and you get this boom-bust scenario. So the debt consumption increases until a time comes when the lenders question the ability of the country to be able to repay those debts, and not just the country, but it's a multiple levels. So the ability of individuals to repay their debts and companies to repay their debts, and ultimately sort of all the way up through to national bonds, whether the government can actually repay its debts from taxation. A time comes, so when that time comes, it's some form of credit crisis, and that credit crisis then leads the government into a money printing process, and that always takes time to work into the economy, and there are some unique things that happen, but which lead basically to prices rising, and this cycle of money printing and prices rising, and money printing and prices rising, that ultimately leads to the final collapse of the currency. I mean, when a government prints money, what it's really effectively doing is it's diluting the monetary base, the amount of money that's out there. It prints more and just dilutes all the other tokens or currency tokens that are there. And ultimately, when you do that on a large scale, you end up diluting it to the place where the currency loses any value. But in that whole process, it's a very long, drawn out, and very extremely painful process for people who have to experience it, who are actually trading with those currency tokens.
Yeah. Now, in the middle of that crisis, in Zimbabwe in particular, we mentioned Venezuela and all the other countries that have experienced hyperinflation, they always ultimately look for another storage value or another medium of exchange. And so in Zimbabwe's case, where were the people running and what were they trying to gather to be able to do transactions with on a day-to-day basis as their own currency, the Zimbabwe dollar, was being hyperinflated away?
They went for anything that had value. The interesting thing about money printing is that it stimulated the economy in the sense that when you got newly printed money, you actually didn't want to hold on to that money because it was going to lose its value. So you went to go and buy anything that you could, anything that could possibly hold its value longer than the currency units would do that. And so this caused a massive consumption, quote unquote, a consumption boom. But the same thing that it did on the flip side was it sort of collapsed production. And so you just had people consuming and buying anything that they could. But in the process, there were a few things that were universally recognized. The first was food. Food and common commodities like soap and those sorts of things, that people could use, actually became mediums of exchange because everyone needs food. Everyone needs soap and toothpaste and sanitary products and those sorts of things. The next thing was people needed fuel. Fuel is a universal commodity that everyone needs. It's the driver of all of your economy. In fact, fuel became effectively the de facto currency in Zimbabwe. People needed fuel, and they began to price things in their own kind of sense of understanding. They began to price things in liters of fuel. And then finally, for large transactions and any people who had offshore accounts, people would do whatever they could to get foreign currency. And there was a massive black market for foreign currency because obviously the government didn't want they didn't want people to trade in US dollars or foreign currency of any sort because that undermined the ability of the government to print money. And so that led to some interesting trade restrictions. If you were caught with US dollars, you were put in jail. US dollars obviously was a foreign currency, it's a global foreign currency that was useful in Zimbabwe. If you were caught, you were put in jail. If you were caught keeping books of accounts in US dollars, so just recording transactions in US dollars, you were put in jail. Okay, it was such a substantial what we call transaction control, because obviously foreign currencies would compete with the government's ability to print money.
Yeah, interesting. Now, to dive even further, in the midst of that hyperinflation, the local currencies, everything denominated in Zimbabwe dollar was hyperinflated away, which means that it returned to its intrinsic value, technically of zero. But one thing that a lot of people don't take in consideration is that the impact it has on the older generation, those that have invested and saved and did everything in that particular currency. Share with us, anything or any stories or any thoughts that in regards to the retirement savings, the insurance policies, all those things that were set at a certain Zimbabwe amount, how the people were impacted when that basically was canceled or null and void because there was no purchasing power for those contracts or agreements.
So the thing about money printing is that it destroys people's savings. Money printing penalizes those who save, and it rewards those who consume. And so people who had diligently saved all their lives lost everything. The hyperinflation basically wiped out the savings of an entire generation. When I went there to study the hyperinflation, I interviewed many pensioners who had lost everything. And they had continued working until they were in their 80s because they had no savings. If you think about it, you put your money into a savings pot and you contribute in a certain, in Zimbabwe dollars, a certain amount. and those Zimbabwe dollars become basically worthless. You can get paid out in those Zimbabwe dollars if it's a sort of defined contribution plan. It could buy you nothing. If it was a defined benefit, people who came later on in the process would contribute so much more relative to what you contributed, because of the monetary units had inflated away. The bottom line is that pensioners lost everything, and investing in the financial system in Zimbabwe was a terrible idea, and it effectively, as I said, penalized people from saving.
Yeah. Now let's fast forward a little bit to 2019, where we're at now. And so, as I mentioned at the start of this, I've heard and saw some recent articles that there could be a possible scenario of Zimbabwe heading back down that route towards increased inflation. Now, from your knowledge, what's the pulse like there now? Like, people, it's 10 years or so after, have people forgotten, or is it the people still conscious of what happened, and where are they currently at now as far as what medium of exchange are they using? I know they have the bond notes, and share a little insight as to what's going on currently.
Great. So Zimbabwe it has had such an interesting history. So it's very dynamic and very fluid. After the hyperinflation ended in 2008 and the beginning of 2009, the country completely dollarized. It became a complete cash-based society. You had to import boxes of notes, US dollar notes, South African rands, British pounds to actually trade. People would carry around notes to actually pay in the stores. Then the IT companies, and by the way, at the end of hyperinflation, people had no trust in the banking system because their money had been taken so many times. And so the cellular companies came out with an interesting thing. They said, well, look, you can transfer value to people using airtime. So initially it was this idea of sort of transferring airtime, but that quickly became, you can top up a wallet on a cell phone and transfer money. People didn't think that was the banking system. They trusted the cell phone companies, but obviously there was a bank on the back end that had stored all the money. And so cell phone banking is a very significant thing in Zimbabwe. And on the back of that, the banking system then grew again. 2015, the government said, look, we don't have any change, so we're going to introduce these things called bond coins, which basically, you can use these coins, you can then cash them in the bank and get real US dollars, okay? And it was just the change component because there was nothing less than a US dollar that could be traded. And that took a year and a half to get established, and people started using the coins. And then the government used that as a backdoor to issue what they call bond notes. It was a 1-for-1 ratio bond note to US dollars. Anyway, fast forward, the government naturally printed more bond notes than the US dollars that they had on hand. And people tried to get all the US dollars they could out of the banking system, so it was a mass deflation. Suddenly, the banks were exposed; they didn't have all the money that they thought they had, and then they've now started printing these bond notes, and US dollars have sort of come out of circulation, and people were using bond notes. Then recently, they changed the currency. They implemented a new currency system, which is sort of government speak for, we're going to just sort of issue a new token that looks the same but with a different name and gives us the right to print money. But this time, you no longer have the backing of a 1-for-1 for a US dollar. So now Zimbabwe are back in the fiat currency system, and they're printing money on a large scale, and it's causing prices to rise. It's causing major social unrest. When I say causing, there have been moments where the country has bubbled over into mass strikes and mass demonstrations, and that's been sort of crushed by the government. But certainly the amount of money printing that's happening in the country at the moment is substantial, and it's causing prices to rise quite quickly in the country.
Right. So it sounds like obviously the people have not learned their lesson on the dangers of promises on paper and debt and things of that nature. So let's get a little bit towards some possible solutions. And so we know right now there's a big move and the cryptocurrency blockchain space. Not sure what's going on down there, but I know you're a part of a project or whatnot. So share with us a little bit about your thoughts and ideas on what made you decide to start offering us some type of a solution for the people there in Zimbabwe.
Great question. So we believe that currencies are effectively tokens against your economy. If you can, if you think about why do I trade US dollars? Well, it's because people accept it on in a network. But those US dollars in your country are just tokens that represent and reflect the whole country. The beauty of blockchain technology is that it allows you to establish a fixed currency system that represents your entire economy, which no central players have the ability to go in and start fiddling with the money supply or start taking money from people's accounts. In a nutshell, we at Zimbo Cash are establishing a decentralized currency system for Zimbabwe. We're allowing everyone in Zimbabwe to sign up. So it's an airdrop to the nation. And then we'll put it on an exchange and allow people to sell on the exchange with one important condition. We're saying that, look, we're giving this to you for free, so you need to actually do some work to establish the network for us. If people have made 6 transfers to unique users on the system, then they can sell. And they can only sell 10% of their tokens. So the bottom line is, if they make 60 transfers and in the process sign up 60 people, then they can sell their tokens on the exchange. And our target to get people making trades between themselves with reference to a market price. Okay, we will have won if someone will say, look, I've got apples and I just don't have any money, but I do have these Zimbo Cash and there's a reference price. Can we then do the trade based on that reference price? That's when we will have succeeded. We're effectively, since hyperinflation, money printing has taken away money from people by eroding the purchasing power of the money that people have had. We're undoing that. We're doing it the other way. We're actually giving tokens to Zimbabweans, and through the process of establishing a network, we're actually giving wealth back to the country. This is the beautiful thing about Zimbabwe. It is the only country in the world where you would be able to establish a fixed currency system, a sound money and banking system. The people have had such a terrible money and banking system for so long that the openness and interest in a decentralized currency system at all levels, from both from the people and even all the way up to the government, is high. The beauty of the cryptocurrency movement is that the promise has been a fixed currency system, but it's not been able to deliver in terms of being able for someone to be able to go into a store and make payment directly, and that person actually receiving that currency and recognizing it, and people pricing in that currency. Zimbabwe would be the first place in the world where you'd be able to have a decentralized currency system for people living on the ground.
Yeah, interesting. It seems very exciting, because it looks like the people continuously choose to opt into the old system over and over again, and they end up losing. So the best thing for them to do would be try something new and just see where it goes from there. So, Philip, as we draw towards the end of our conversation this afternoon, it's been great get a chance to find out more in-depth information about Zimbabwe and how just the monetary policy and just that money or currency printing destroys pensioners and everybody included. Any last thoughts you want to leave us with here at Silver Doctors?
Zimbabwe, it's a fascinating story. It really is. The Zimbabwean story is really fascinating. But it's a picture of a global issue. In Japan right now, they are printing approximately 80 trillion yen every year, and using that money to pay off government debts and to effectively bail out the banks. It's a lot of money. I mean, 80 trillion is 13 zeros, and they're doing that every year. In the Eurozone, until recently, it's been about 1 trillion euros that they print every year. America's been printing since 2008. America's been printing money on a large scale. China has been printing money on a large scale. With the whole Brexit issues, England has been printing money on a large scale. Interestingly enough, Switzerland has been printing money relative to the size of their economy. Probably one of they've been sort of one of the leaders in terms of money printing. They have a major problem because their currency appreciates. The Swiss central bank holds more shares in Facebook than Mark Zuckerberg. The point is that people say, well, isn't this a major issue? And why don't we see any inflation? And the lessons from Zimbabwe, it takes time. And we have a unique situation where we get to prepare, and we get to see the signs. I mean, it's very clear. It's not sustainable. And to me, in some sense, people don't like to know that those facts, because it's a scary sort of these are scary thoughts to consider. But in another sense, they're empowering, and they are what they are, and we get to make choices now that'll impact our future based on how we understand and see the world. My encouragement to your viewers is that this is an opportunity that you have to really study and to really get an understanding of what happens, and to maybe you've got some Venezuelan friends, and speak to people what is happening in Venezuela. Do your research and allow yourself the capacity to really grapple with these issues, because it's an opportunity as much as it is a risk.
Yeah, I do agree 100%. So, Philip Haslam, it's been great having you join us here on Silver Doctors, and look forward to continue to stay in contact with you.
Great. Thank you, Mike.
My pleasure. Have a good day.